we cannot get any wholesale silver bars now. We have to actually pay in full for any, and believe me, this size that we're asking for will not be fulfilled, but we're trying to get tonnage and size. We've had to book it for January, February, and March of 2021. That's ludicrous out. And what it does is tell us something is majorly wrong.
Hello there, my friends. Chris Marcus here with you for Arcadia Economics as we continue our coverage of the silver market unraveling. Well, actually, that's not fair to silver. Silver isn't unraveling. It's not doing anything other than perhaps exactly what today's guest, Andrew Maguire, was kind enough to explain to the CFTC back in 2010, the Department of Justice in 2011, listeners around the world in the metals community for the past decade. Andrew, I'm so darn grateful that you gave us some time to be in the book, The Big Silver Short, because what you laid out there is incredible. I know I get emails every day from people who are enjoying it, benefiting from it. And certainly because as we welcome you on in here today, sir, I mean, it's like the silver market must have known you were coming. Look at that, a spike of, that's a spike in the silver price big enough to make Silver Bill Murphy smile. It's fun to think. I know Bill's got to be happy there today. Big move in the gold price. Maybe by the time we're done with our recording today, we'll have $2,000 gold. So incredible things happening. I don't know if it's possible to have picked a better day to have you on here. So welcome back on in, sir. Andrew Maguire of Kinesis Money and a bunch of other important things in the gold and silver world. So it's a pleasure to have you. And how are you doing today?
No, that's great. No, it's great to be with you, actually. And yeah, you know what? It's nice. I like doing these monthly things. I think one of the good things about a monthly thing is, you know, like we all get caught up in the daily chart chatter, and you know, people like JP Morgan coming in and saying, "Oh, I wouldn't be buying any gold here close to 2,000." We're essentially making calls that say, "Sell the shit out of it." So basically, what it's nice to do is to come in and just take these monthly updates and kind of connect the dots, eliminate all this chart chatter, and just weigh up, you know, gold and silver, the stepping stones, and where we are. And it's really good to, you know, just look at this larger picture from time to time, as we are today. And we certainly think that poor old JP Morgan was on the wrong side of that trade. But really, it's so important. This week, we're looking at what this week is bringing. We're now into holiday season, right? So and all the trading desks I speak to, I mean, start at 5:30 this morning, barely anyone on there, thinly manned, and most of your countrymen are chilling out in the Hamptons. Yep. Well, or should we say they're only chilling out in the Hamptons if they're hedged or net long gold and silver. That's for sure. But kind of picking up from where we were last month with all that in mind, I think there was 5 things that kind of ran through my mind that, and I think that we could kind of update these 5 things, which is which was the impossibility of the daily inflows of SLV, and, you know, were they real? Then there was how the fundamentals are resetting the technicals, the CME restoring confidence and how they attempted to do that, how it's backfiring on them. I mean, these are all good subjects. Goldman, this is going to be something for you. Goldman spreading rank from the cabal. And everything we kind of discussed today, though, it boils down really to the physical market overrunning this massively offside paper market. And it is this tectonic shift that's going to force officials to revalue gold, which is something we will lead into because it's such an important dynamic picture. Look at the charts today. I mean, there are levels here which are approaching, those levels are getting close. Now, we've had a lot of technical traders extremely wrong-footed by the likes of JP Morgan, etc. But what are these guys doing? They're relying on historical trend lines and indicators that really instigated these calls. And so we'll talk about all those things, but I think we were talking about silver at the beginning, weren't we? Is that a good place to start, you think, Chris?
Yeah, although I can't help myself. You had two comments that made me giggle there. First was when you said the CME restoring confidence. That there's an oxymoron. It reminds me of, and for people who have been in finance for a couple of decades, we haven't seen it recently, but usually when a government official comes out to warn the public everything's okay, that's the sign that, things are collapsing behind the scenes. And the other thing you mentioned that certainly perhaps you can dig into is that you said JP Morgan got caught on the wrong side of the trade when they said they just, I love it. They can't find any fundamentals to support gold going over 2,000. Although when you look at the delivery report, amazingly similar to Goldman Sachs, right as they're saying, they just think gold is a pet rock. There it is in their house account, taking large deliveries. So anyway, I'll let you take it from there. I mean, some of the stuff is just incredible, and I appreciate you pointing out the fact from banker public fiction that so many people hear, and that's why I think a lot of people are grateful for what you share, because the banks are saying one thing and doing another, and that's what banks do. But fortunately, you can shed some light on all of that.
I think what drains the swamp and all of that stuff is actually the wholesale market view. And I think you do have some good, Sprott and all these kind of people understand the wholesale market. But because we're so close to it, I think when we see these calls coming, when we know, for example, we cannot get any wholesale silver bars now, we have to actually pay in full for any, and believe me, this size that we're asking for will not be fulfilled, but we're trying to get tonnage and size. We've had to book it for January, February, and March of 2021. There is no silver, but we've just had our last 130 bars from JP Morgan 2 weeks ago, 1,000-ounce bars. That's the wholesale bars. That's it. There's no more. We were told there's no more. We had 640 bars off them, I think last time we spoke, or it was certainly about 4 weeks ago. And I remember that elicited some comments about, I want to make a comment of, what the authenticity of these bar lists is a concern. One thing is we're saying is obviously we're talking about massive shortages. We're also talking about not bullion that has to be refined. We're talking about wholesale bars that sit in the exchange of, or in the vaults of a bullion bank who is what? In the business of selling bullion. So when we ask for, we need X number of bars, whatever it is. If you start to get over 900 to 1,000 bars, forget it. You will be denied. And furthermore, we're having to move that to 2021. But here's the issue. These guys won't even give you a bar list, let alone, and this is coming out of inventory. So what the hell's going on here? We're not talking about bars that have to be made yet. This is a bullion bank who has inventory, by all accounts, and won't even send you the bar list, but you have to book it way ahead and pay for it. That's ludicrous out. And what it does is tell us something is majorly wrong. Now, you already know that. We already know that because other people are talking about there's no kilo bars. Well, I can attest to you the fact there's no kilo bars either in the whole of Europe. We've had people approaching us and saying, look, we'll pay over the odds. Can you get us some kilo bars of silver? No, sorry. They're sold out everywhere. And I think the same thing, you're finding the same thing. But really what got my goat the other day was the fact is this last 130 bars that came from JP Morgan. And this really, really questions the authenticity of the entire system. Every single bar number was incorrect. Now, can you believe that? We're talking about something out of inventory, 1,000-ounce bars, wholesale bars arriving, and every single one of those serial numbers was incorrect, to the point where we had to go to the original refiner and try and get the exact weight. I mean, apart from the hassle, that's crazy, crazy stuff we're talking about here. That how is that possible? How could you be that lax in your inventory control?
And Andrew,
SLV, yeah, I mean, exactly. Jeff?
just a quick question on that, because as you're saying that, I mean, you know, it's already incredulous as it is, but these guys are the custodian of SLV. I mean, if anyone should have their records straight, it's, I mean, and I know you're going to dig into it, where we're seeing, and I've heard several other silver participants, mining executives, I mean, people in position to know, who echoed what you're saying, that they think it's impossible for the amount of metal being reportedly added into these silver trusts going in. And who's the custodian of SLV, criminal enterprise, JP Morgan, and they don't even have the right bar numbers? I mean, how are people supposed to feel safe? I mean, I mean, there's the chance that they steal it, or there's some hidden fee, or God knows what. But I mean, now we're finding they can't even keep the bar numbers straight. So what are people supposed to think?
And that's from their own inventory. That's from their, so talk about housekeeping. I mean, that's pretty bad for somebody who's supposed to be overseeing the trust. But we talked about last time, it's impossible. I think the 980 odd bars we had, of 640 were from JP Morgan, but we tried to search because we were suspicious. We thought, let's search. There's nearly 8,000 pages of SLVs. Why is it that it's not on an Excel spreadsheet? Why is it that they don't make it searchable, a searchable PDF? Why is that? That's impossible, that those documents do not exist for somebody. And so that, again, this whole thing is smoke and mirrors. And we will look back, historians are going to look back at this and say, it's amazing that these guys we're just talking about one bank right now. Amazing that this criminal enterprise was allowed to continue. And hey, Chris, haven't you got some, you've got a petition up, and I was really interested when I saw this. I think you were talking to Bill Murphy about this. Tell us some more about it, because I tell you what, we should sign this.
Well, I mean, I've had a lot of things planned for a couple of years. I've had all these ideas floating around my head. Now it's quite a blessing. I have guests like you and an audience. And among that, you know, I was thinking, all right, we have JP Morgan. You told the Department of Justice, CFTC, a decade ago. Then Bart Chilton confirms it. Department of Justice gets the guilty confessions, confirms it. I don't know if you've ever read that book, JP Madoff by Helen Chapman, which it's about 200 pages of JP Morgan felonies, including how they were the sole banker for JP Morgan, which I believe is quite unusual. Usually you have this syndicate on that type of deal. I think there's enough to say. I mean, I always thought if I had done anything like that when I was on the trading floor, I'd be in jail the next day. I know they scare people with this too big to fail whopper. It's like, well, the mafia is too big. But I mean, is there at least enough to say that these guys should not, hey, if you want to have a side casino with Goldman Sachs and Citibank, and you all pick each other off and steal from each other and count cards and do shady stuff. But I mean, is there at least enough for people that, and partly what got me into this is that I think a lot of people bought silver and gold in 2010 when they saw QE2 was coming. They saw the debt ceiling. They saw how obvious it was that this is a Ponzi scheme, whether the government or the banks. And I don't think they lost or were wrong. They got cheated, and these guys are continuing to do what they do. So is there at least enough to say that JP Morgan shouldn't be allowed to play in gold and silver?
Totally agree. I think that's a great thing that you're doing there. Number one, I think your book is fantastic. It's bringing a lot of awareness from people who've never, well, who would not even think it was plausible that a big bank could operate this way, nor anyone with a white collar, basically. No. But I mean, essentially, you know, then you've sort of connected the dots to this. I think there's going to be lots of little doors that open. I think people should jump in on this, because really, why should there not be a lot of signatures on this? I know there are class action suits galore, and wait till JP Morgan, the DOJ's finished with JP Morgan. there's going to be literally billions and billions and billions of dollars of class action suits coming out. So there are people out there, and really they should be reached. They should come in, and really it's time to stop somebody who has such bad provenance, that's putting it politely, to literally replace them as the custodian, while there are so many questions to answer. And that's the very least. So I thank you for that, and I think all of us thank you for that. And we're all in the same boat here. We're looking for fairness, transparency, just a fair market for everything, whether it be grain, whether it be, you know, silver, gold, whatever. We just want a fair marketplace, and there's a social side to this as well. But essentially, what is happening to this, I guess, from the bigger view, what's happening to this rigged market that has evolved over time since 1974, pretty much, but because that's the whole the whole reason the COMEX was established, was to create volatility and dilution. And so then we got to, and I know we talked about this, we got to March the 23rd. And of course, we drew attention to the fact that this was actually the point where we're going to see the historical resetting of this decades-old paper-driven, you know, the technical drivers that have been allowing these guys to execute very large trades in the middle of the night, or a disproportionate position concentration, where they could visibly target people on their own book, that they literally target their own clients. And what happened is these technical drivers, we've seen an upsurge of physically driven fundamentals. And that's, I think, what happened here on this break on the 23rd of March. We can talk about it in many ways, but essentially the scale and scope of this pivotal moment is unprecedented. And I know you've got a lot of people who've talked about it, and we've talked about it. But now, while, you know, again, this goes back to JP Morgan last week. While obvious overbought indicators, and they, you know, people say, yeah, what about, I get a phone call, RSI, stochastics, you're crazy here. This is going to turn. It's got to turn now. And okay, it's elicited calls, and then along with a perfectly placed call by someone like JP Morgan to say, well, you should really be buying here. I mean, honestly, what we're saying is, and I know you drew attention to this criminal enterprise, and you are drawing attention to them, and they were on the wires, big time, drawing attention to us. Similarly, and this is the irony of it, they were trying, the nerve of this, they were trying to, I heard this on Bloomberg, they were trying to draw a similar technical setup, overbought condition, parallel to the $560 smash in April 2013, between 13 and 15. I mean, I say disingenuous is too kind a word, but you have to account for the fact they act as a primary dealer for the Fed, and they're an agent bank. So trying to scare out a few paper gold and silver positions is not going to ever get sufficient traction to offset real delivery demands based upon, you know, whatever price they try and spin. It's going to be asked for delivery. And so that's what nullifies these historical technical sell triggers, is that fresh physically driven fundamental drivers are simply overwhelming the ability to create enough paper gold and silver. And it's that simple. And there's a concatenation of bullish reasons for this, but one of them is the breakup of the old guard cartel, as well as, of course, we've got the regulatory focus on predatory position concentrations, which has been forced into play through these lawsuits. Thank you, JP Morgan, because you brought it to a head, but because you got too greedy, basically. But what we're witnessing is the process of the resetting of these technicals. And I think it's so important because not everyone's a trader. And this whole COMEX thing was designed to create this kind of volatility that just makes it, you know what, it's too volatile, I'm not getting involved. So these current footprints, there are some current footprints that really show there is a breakup of this old guard, and it's very important. And so right back to last week, so there's a current example. While JP Morgan attempted to incite this profit taking, And note the timing, early access market conditions, and that was the options expiry last Tuesday, the 28th.
Yep.
And we evidenced, but interesting, they came in with this sell advice. Then we evidenced on the same, within an hour, Goldman Sachs countering that by upping their gold target to 2,300 from 2,000 and their silver target to 30, underscoring our assertions that really there is a break in the old Arcadia bell. And I think we know that that happened by the time they got to 2015, between 2013 and 15, all of these guys, Goldman, JP Morgan, Citi, Bank of America, everyone was singing off the same hymn sheet. Not happening anymore. And people are starting to realize that there is something major happening. So, but I think it's important that I talk about Goldman for a minute, because they're intricately interwoven with the Bank of International Settlements. They're connected by an alumni sitting in all the key roles of all Western central banks. And that the BIS has coordinated a massive gold suppression scheme since the dollar de-pegged from gold. And it's wise to take note of what Goldman is doing, because these guys are the perfect they're the perfect indicator to tell us, well, hang on a minute, if they are now talking a bullish book, something has changed here. And that's the question I've been getting. Really, so, I know that some of this is a bit of history here, but it's important. We can't just say, well, Goldman's long. I mean, up until 2013, Goldman acted as this cartel agent bank, and they were really at the beginning of it. I mean, can you ever remember a time when Jeff Curry, I can't remember a single time when Jeff Curry from Goldman issued a buy call for gold through this entire millennia into 2015. However, it's after that the officially coordinated rinse, that the Goldman Sachs tactics began to change. Now, basically what they did was, by December 2015, and we know this from a wholesale perspective, they were extremely well structured for a rally. And they were by no means done, and they're by no means done yet. And really, we're talking about stair-stepping ever higher prices. But what Goldman is doing is, because they're on the right side of an upcoming known gold price reset. And that's why it's important to talk about Goldman, because they will never lose money. Goldman are at the center of everything. And now I became aware of this a couple of years back through a very close contact working on the Goldman Sachs gold trading desk, which we validated against the confirming wholesale market footprints, confirming they had split ranks. And I'm talking about ranks from the cartel, which was the known cartel that Gatta talks about, that Bill Murphy talks about, that everyone accepts is in place. And in fact, even the industry apologists said, well, yes, we're a group of banks that work together. But so really what we're beginning, I mean, basically, these guys were Goldman was beginning to position for a significant gold price revaluation. Why not? They'd just been involved with driving the price falsely down to 1,045 in 2015, a ludicrous price. And yet I still remember calls for 800 gold at that point. There were people that were just talking about it as if it was going to go to zero. Why? Because they look at a dot on a screen. It's not deliverable. It's just an electronic mark on a screen, and there's no reality to it. And that's why they were able to fool enough people to bail out, thinking that even at 1,045, oh wow, let's sell it all. And guess who was on the right side of this? So really, JP Morgan, Goldman Sachs, all of these guys stealthily accrued a very sizable silver position. But what is not known is that really, and in fact, I must confess, I did not know this until recently. that Goldman have an enormous physical silver position. They just don't sell it. That's why we don't come across it on the wholesale business. They do not sell it. Now, JP Morgan, we do get silver from them because they're a trading bank, but again, not in the size we want. But Goldman's free of shackles. Now they're chalking up their own book. We should take note. They're also reflecting the official stance. That's why we should take note. And last week, as I say, they upped their target. I remember it was at the beginning of the year, it was 1,800. And that seemed like, oh, it's impossible. They already knew that it was 1,800 before it got there. Then they upped it to 2,000. Now, last week to 2,300, right? And silver to 30. Now, just note, though, there's no coincidence. These levels are just under the wholesale market 2,500 spot gold revaluation point and $32 silver reevaluation point. And we've talked about this before. This is most of the liquidity providers I talk to say, at that point, you need to revalue gold because nobody's going to put any up for sale at that price because you're going to have so much fresh money coming in that the offer to sell is just going to evaporate until you've got so much momentum. It's not going to stop there. Yep. Now, the question is, Goldman, how long can 2,300 be contained? Can it be? I mean, we need to watch this. It will get there. It'll give us a better date stamp for the revaluation too. And also the signal that the revaluation event would be imminent would be if the EFP, the exchange for physical conduit, suddenly froze up or was closed. Well, hold on a minute. It got pretty tight yesterday. Did you see? Have you looked at it yet? It was just really, I've never seen such small amounts, but that to me is what you'd look for as somebody looking, well, you know, where am I in this whole process? And so the wholesale market footprints confirm Goldman, read the BIS, is much more openly going long at gold for their own physical book, while the likes of the Fed agent primary dealer banks, which is JP Morgan and Citi, are net short on the paper side of these competing Goldman Sachs accumulations. So, but given Goldman's footprints, we can also be sure that the Bank of England and the Treasury are gearing up for a physical upside revaluation. They're not stupid. Of course, they know it's coming. It has to happen. So this vampire squid's tentacles, they're deeply embedded inside the BIS. And we see officials readying to square up the books with a revalued gold price. Has to happen. Either way, whatever way you look at it, gold and silver require significantly higher prices to square the books. So don't listen to any of these crap calls out of these idiots who are trying to get people to puke up positions so they can actually buy more themselves. I mean, so, you know, people say, well, then, well, what about, you know, how are they going to square these books then? Because they're still acting as an agent. They're still trying to slow the ascent of gold and silver. Gold, pretty much. I mean, silver, I think that's kind of losing its lid.
So that was part one of this incredible call with Andrew Maguire on a historic day. And I think you're going to want to see part two, especially some of the things he digs into. Really, are we coming to the end? Where is this silver coming from? The shorts buying back their position on the COT report last week. So by all means, hit the subscription button and the notification bell right down there so that as soon as that is released, you will be one of the first ones to know about it, even before Goldman Sachs and JP Morgan. And I will see you again soon.